May profits be upon you. Welcome to another weekly Forex Forecast. We're taking a look at the Euro USD, the Euro USD. First, if we take a look at the economic calendar for the upcoming week, the one day we have to be aware of is Tuesday. Monday, there's no red folders. Tuesday, we have the RBA giving an interest rate decision for the Aussie, and later on we have core CPI. That is a high impact news item. And if it comes in soft, then the US dollar will weaken. If it comes in a little hot, we are expected at 0.3%. The expectation, it'll strengthen the US dollar and it'll pop higher. Um, Wednesday, Wednesday we have Aussie news. Thursday we have pound and US dollar news. PPI, another one, core PPI. That's going to be a good fuel injector into the markets for liquidity. And then we have some holidays for some Euro partners and US dollar news here, retail sales and all. Okay, so Tuesday, it'd be probably best to trade after the news, the major euro pairs. I mean, the major US dollar pairs, pound USD or euro USD. And we're getting ready to do euro USD right now. New Zealand dollar USD, and the rest of them. Okay. Now, we're looking at the monthly time frame. You can see there's a downward channel, just like you could see that there is the opposite in the US dollar index. There's an ascending channel. This one is a descending channel, and we've reached the high here. The what is this called? The resistance line of the channel, and every time it's reached this diagonal uh, resistance line, prices drop. This time, it didn't just drop like it did over here. It fought a little bit higher, higher, higher until it failed to make a new high. Right. This one, it's obviously not going down on the first shot. And what we want to see, what I want you to see is it was this nice bullish move, almost an equal bearish move right afterwards, and then this upshot here. For the month of August, it's starting pretty bullish, but it is a young month yet and still. All right, we broke above this the consolidation here. It's a long period of consolidation. We swept the lows and then pushed up, and we ended up here. All right, so right now on the monthly we are bullish for sure, right? On the monthly we are bullish. On the weekly, things get a little different. What is this here? I'm going to show you. If we see that we have the push here, we have the sell, and then this buy up. All right, it's a nice impulsive buy up here, and then we go into this kind of consolidative configuration here. But what I want you to see in this is this bullish fair value gap here. That is a bullish fair value gap. If I can draw it right, I'll be all right. And we can see these down close candles pushed into it, even pushed past it, but did not close past it. And what do we see? Price on the next week closed higher than the previous week. So it looks like price respected this bullish fair value gap until the week of the 28th of July. It not only did it was it a strong push down past the bullish fair value gap, it closed past it. What does that mean? Well, the key is in the next candle. See, this move up, where the buyer stepped in, this happened on NFP. All right, the NFP numbers were bad. Those employment numbers were bad, and that um, weakened the U.S. dollar, right, and it allowed the euro to push higher. All right, this is the down move. This is the retracement. The retracement's going in where? The premium of this trading range, the premium price of this trading range above the 50% line of this trading range. So it's going to be a little bit more obvious when I show you on the next slide, on the next time frame. But what happens is, because price showed respect to this bullish fair value gap the first time by closing above it and all, and then coming back through it, that means it'll turn into resistance when price comes back to it. That's an inverted fair value gap. That's why it's pink with an X on it. All right. So I'm looking for this to push price down further. Look on the daily time frame. All right. You can see that we had this gap down and then a hard push to the upside. That's an impulsive move. This is the manipulation leg, if you will, where it swiped the liquidity, the buy side liquidity, all the way up to the resistance line of the descending channel. All right, price push down. All right, that is the retracement of this impulsive move. We have a retracement and then another push up. This is the respect being shown the bullish fair value gap, right? Remember? So, but it failed to make a new high. That means this is a weak low because it failed to make a new high. That means it becomes liquidity. All right. And price came down and broke that low. So this becomes a change in the state of delivery, right? That swing, once price broke that swing, this is a mitigation block. All right. This is a mitigation block. All right. And once price breaks that low, you expect price to return to the point of that low and find resistance there. That is this inverted fair value gap. Now you notice that we had a bullish move into that, and you're going to say, "Oh, wait a minute, wait a minute. What about this fair value gap here?" Right? Good point. It's a fair point to ask. All right, this fair value gap was a bullish one, and we can see clearly this candle already used it. It's used goods. All right, so if price comes back through it, it's probably going to be too weak, and it's not the one you want to depend on to hold. It's likely to fail. You understand? That's why I don't have colored in. What about this one? What about that bullish fair value gap? Couldn't price use that to go higher? Sure, it could. But what happens is, what happens is, uh, this push, this impulsive move, this the what do you call it? The displacement up to these highs is only so price can offer fair value here. Because what happened? We'll reach that high. That's an external range liquidity. We'll move down, we'll move back up, created a new swing high, and then broke structure to the downside. That is a change in the state of delivery. We retrace back into that. This is merely a retracement. All right. And what you did was you found uh, this bearish fair value gap. All right. Watch what I'm doing. This is the the inverted fair value gap. We don't. That's the daily, but on the that's on the weekly. On the daily, we have a fair value gap, a fair value gap. Let me. How did that reappear back there? Stop it. All right. We have a bearish fair value gap here. We don't need to draw us. It's there, but we have a daily bearish fair value gap here. All right. And with that daily fair value gap inside, like the daily one inside the weekly inverted fair value gap, it's like it's nested in there. You understand? It's like two confluences of supply of resistance. That's all I'm saying. Okay, and what was I looking for? All right, and I'm looking for price as long as we don't break this fair value gap. If it holds, I'm looking for price to come on down. Yes, I'm looking for it to snatch that bearish that swing low, right? It's a small French swing low, but it is a point of sell side liquidity. All right, and this is internal range liquidity. I'm looking for a price to attack external range liquidity at the low, not this low, this low. I'm looking for this to happen, and I'm looking for that to happen in the near term. Okay, so that's it. I am bearish in this market. I hope uh, this is enough to compel you to think, yeah, he might be onto something. You see this low here? This is the last bullish leg before that mitigation block, before this area of fair value gap. This area of fair value was offered here, and price uh, is kind of, giving that indication that maybe we might be turning around here. And I want to also mark this area here as a more substantial low to break. Why is it more? Because this was the leg that established the high. This is the high, the of the of this bullish leg here. So once we break that for me is a more substantial break, and maybe the uh, area where you would consider the change in the state of delivery. Okay, I'm looking for price to continue down from here. Make sure you leave a question in the comment section or a comment that says, listen, I think this is going to break these highs. I think we're going to go for the buy side liquidity. I think we're going to break the descending channel at the top and all. We're not going back down. Maybe that's what you think. All right. And that's fine. I think that's going to go down. All right. Just leave a boost or a like in the on this video, and I will see you in the next video. Hey, my next video is going to be the pound USD, so make sure you catch that, and don't forget to catch the US dollar breakdown I gave just before this video. That's very important because that's going to help you to see what's coming with the other major pairs. I'll see you in the next video.